Iraq's oil exports during the first 5 months of 2025 surpassed 500 million barrels. Iraq's total oil exports in the first 5 months of 2025 were 507,699,760 barrels, or 101,539,932 barrels per month, according to figures provided by the State Oil Marketing Organization, SOMO. Oil exported from oil fields in Basra and central Iraq through southern Iraqi ports reached 492,543,872 barrels, while the oil exported from the Qayyara oil field in the northern Iraqi province of Nineveh totaled 4,745,590 barrels. SOMO statistics indicated that oil exports from Kirkuk to neighboring Jordan during the first 5 months of 2025 reached 1,649,316 barrels. The country's financial revenues generated from oil exports between March and May reached $20.81 billion. The majority of Iraq's oil exports go to China and India, followed by U.S. companies. Iraqi oil shipments fluctuated slightly in the first quarter of 2025 as the country stuck to previous OPEC Plus production limits, despite a rise in export volumes during the first 2 months of the year. Iraqi oil shipments declined dramatically around the end of 2024, notably in December and November, as a result of Baghdad's commitment to voluntary reductions under the OPEC Plus agreement. Experts anticipate Iraq's oil exports will gradually increase in the next months, with the OPEC Plus group of 8 members announcing the voluntary return of restricted supplies in April 2025. Iraq's economy is oil-dependent. Iraq is one of the world's most oil-dependent economies. About 90 to 95% of its government revenue comes from oil exports. So, oil sales directly fund government salaries, public services, infrastructure, budget for subsidies. Foreign currency reserves at the Central Bank of Iraq, CBI. Oil exports USD inflow FX reserves. When Iraq sells oil, it earns US dollars, USD, not Iraqi dinars. These dollars go into the central bank's foreign exchange reserves. Example: in March-May 2025 alone, Iraq earned $20.81 billion from oil. This inflow replenishes or strengthens Iraq's USD reserves, supports the central bank's ability to defend the dinar's exchange rate. How this affects the IQD. The Iraqi dinar is not freely floated. Its value is mostly pegged to the USD through managed auctions and interventions by the central bank. More oil revenue means more USD supply in the country. The CBI can sell USD in the currency auction to meet importers' demand for dollars. This helps stabilize the IQD, preventing depreciation. If oil revenue drops, fewer dollars come in. The CBI may struggle to supply enough USD to keep the IQD stable. This can devalue the IQD or force unofficial black market rates higher. OPEC Plus cuts and production limits. When Iraq reduces oil output to stick to OPEC Plus quotas, its total export volume and dollar income drop, unless higher oil prices fully compensate. Lower volumes plus weaker prices equals less revenue equals pressure on reserves. When output restrictions are eased, Iraq exports more barrels, increasing dollar inflows, strengthening the CBI's ability to keep the IQD stable or even slightly revalue it if desired. Who buys the oil matters too. Iraq's top buyers are China and India. These large, stable buyers mean Iraq's oil exports have a reliable market. Cash flow is relatively predictable. This adds stability to Iraq's USD income stream, boosting confidence in the IQD peg. What's the current trend? According to the data, Iraq's exports rose to 507 million barrels in 5 months, 101 million barrels a month. Exports rose after the drop in late 2024 due to voluntary cuts. OPEC Plus easing means more supply returns, so Iraq's oil revenue should rise further if prices remain stable. So, higher export volumes plus stable prices, more USD, stronger support for the dinar. If global oil prices drop, even high volumes may not bring enough dollars. Risk of IQD. Big picture for the IQD. The IQD stability depends heavily on oil exports. Short-term fluctuations in exports, prices, or compliance with OPEC Plus quotas can strengthen or weaken the CBI's hand. In the long run, Iraq's dependence on oil makes the dinar vulnerable to global oil market volatility. Structural reforms, non-oil revenue diversification, and stable reserves help reduce that risk.